Hi again. This lesson is going to bring all that we've learned so far into a workable trading system. Now, every epitome of human endeavor had a strong plan behind it, a plan which people followed day in and day out to reach their goals. We all know the story of Edison, ISRO's Mangalyaan, Apple products, and even Amul milk. They all have one thing in common: a relentless approach to finding what works, and once they found it, they followed the system day in and day out to achieve success. The stock market is no different than any other business. It also has to have a business plan, a trading system. A trading system is basically your plan for success. It's made of a few predetermined factors. The first one is your entry point. Whether you're going long or short, this point has to be predetermined. Then is your stop loss. In a worst case scenario, if your trade turns sour, what is the point you would exit? That's your stop loss. Number 3, profit taking point. So when the stock goes in your favor, you need to know when exactly to take your profits. Now this could be a trailing stop loss or a fixed profit. Then finally is position sizing. How many shares do you need to buy for this trade? Once you have the system and its rules in place, you need to test the system. It must be tested thoroughly over many years to check for drawdowns, hit rate, risk-reward ratios, and other performance parameters. We won't be discussing those advanced concepts since this is an introductory course. So let's begin. The first thing you need to know that the system is a trend following system, and that you might have guessed we use swing highs and swing lows to enter and exit the market. So make sure swing highs and swing lows are crystal clear. We will use the daily charts time frame in this method, and it is suitable to passively invest if you have a day job. This is the setup. It's extremely simple. First, you must identify a swing high. Remember, a swing high is just a resistance point. Prices went up because of demand, and then at some point the demand diminished. Or, well, the supply came in and pushed prices down. That point is your swing high. It's also resistance. Now, wouldn't it be significant if the markets rose and went past that resistance point? It means there is renewed demand, right? This is our entry for longs point. When we cross a swing high, that is the point that we buy. Now this is Axis Bank daily chart. So each bar over here represents one full day. Now this is many months. I just want you to notice one thing. What happens when a swing high is crossed? So let's begin here. You can see that there is a swing high on this day. You can see it's the 5th of May 2014. And we crossed that after a couple of days on this day. As soon as that swing high was crossed, I'll just mark it over here. As soon as that swing high was crossed, you can see that the market continued to move upward really quickly. And you'll see that the market was then at around 300 and we went all the way to 400 rupees. Interesting. You'll also notice that there's another swing high here which was crossed again. So we can draw an entry point there again. The only thing I need you to notice is that a swing high breaks and we get an up move. Alright, let's keep moving on. The markets fell after that and we formed another minor swing high. That's another entry point. This time we did have a move in our favor, but the markets quickly fell. Don't worry, let's keep moving. We get another swing high right over here. The same thing happens again. The markets went up slightly and then went down. That's completely normal. So let's move forward. We have all these bars going down and then finally we have a swing high. Now if you notice, the swing high was broken after only 3 days. The swing high happened on 12/8/2014 and the high was 383. Simple enough. 2 days later, nothing happened, but the third day, that is on the 18th, we got a huge bar up. As soon as that swing high breaks, that is our point for entry. This means that there is renewed demand coming into the markets. And this time, we get a much better move up. Alright, let's keep going forward. We get this move up, then we fall down, and we get all the way to October, where we have another swing high, right over here, which is then broken again after 3 days. Remember, as soon as a break happens, all you need to do is put a buy limit order and your broker will automatically execute that buy order for you. And you'll notice here in October, this trade worked extremely well. We went all the way from 390 to 480 and then almost touching 500. This is one of the main tenets of money management. You need to hold on to your winners as long as you can and cut your losses short. You know by now that we are merely following the big money. Crossing a swing high means there is a good reason for the stock to go up. Maybe it could be good earnings, it could be great macro policy, or even better banking rules. But whatever the reason is, when a swing high breaks, big money is behind it, and if you buy, you can see the result. You usually get a good move in your favor. Now I know we've not discussed exits yet, we'll get to that. Let's see another example of State Bank of India. Now I love this stock because one, it's in the banking sector, and two, it usually gives sustained long moves. So now let's start all the way from May. Now in May, you'll notice there's a clear entry. We have a swing high right here, and we broke the swing high on this day. So we'll draw a line here and we get a beautiful move up. Now this entire area is a sideways move. So this is where most trend following systems don't do well. So let's see how our system fares. We will see that we get a nice move up, which we've captured. Then we have a swing high here, which did not move. So we have a swing high here, which did not break. Another swing high here, which did break on this day. So this is an entry point. And clearly you will notice that this was a lost trade. We didn't move up. In fact, we just did the opposite. We fell. All right, let's move forward. We have a swing high here, which was untouched. A swing high here, untouched again, all the way to this point. This is where the first swing high is formed and is broken by this bar on the 21st of August. So I'm going to draw an entry point here. It's basically a swing high break that we're looking for. And we went all the way from 250 to 260. Not bad. Then we fell again. And we have finally another entry point over here. And as you can see, it's a huge move up all the way to 320. Now this is where I want to pause a bit. I know you have a few questions. Where is the exit? And when you entered over here, why didn't we mention this point of entry? Don't worry, one step at a time. At this point, all you should know is how to identify the swing high and when the break happens. If you can do that, you are good. So let's move on to the next point, which is stop loss and profit taking point. Now you may have noticed some of our trades didn't do so well. Now you remember the coin flip example in lesson 1 where we stated that if the odds are in your favor, then you can be profitable. But there's one issue with stocks. If you are 100% invested in stocks and it crashes, you could lose all your previous profits. We, however, have a system and we can circumvent this using stop loss and position sizing. So let's start with stop loss. Basically, this is the point you will exit if the trade goes against you. What do you think is going to be the logical place for this? We are buying resistance. What would be a good point to place for a stop loss? It's obviously going to be support, right? If we are buying resistance, you might as well put your stop loss at latest support, that is your swing low. Therefore, the latest swing low is the initial stop loss. As the swing low forms, you can raise the stop loss to newer, higher swing lows. Remember, this is a way to trail your stops. So when markets go from one end all the way to the other, like we can see in State Bank of India, we went from this point all the way to here, new swing lows are formed and we can keep raising the stop loss. Remember, the stop loss order is automatic, so there is an elimination of guesswork. You simply follow the plan, place the order, and you will be profitable. So let's see, starting from Axis Bank, how we could have used the stop loss order in our trades. I'm going to change the color of the line to red, so you'll know exactly where the stop loss is, and we'll be able to see our exit point. So this is the entry point we took in May for Axis Bank. This is going to be your initial stop loss. It's actually very simple. That is your swing low, and that's where you keep your stop loss. Then we move further. If you notice, after this point happens, we have a new swing low here. A swing low means support, so you can bring your stop loss here as well. Then we move up, we get a new swing low, we can raise the stop loss here. If you notice, we are still in the entry, but we've not actually made money so far. We are riding our profits. We have entered here and we keep raising our stop loss until we get stopped. So we have a new swing low here, we bring it here. We have another swing low, which is right here, and we raise the stop loss. Now, there is no way to know if Axis Bank is going to reach for the moons. The only way and the only thing we know is that if there is too much supply entering. And the way we do that is we raise our stops. So as soon as markets break this swing low, that's over here, that is our exit point. So make a calculation. The entry was around 314 and the exit right over here at 377. That's our exit. Here is the other entry point. Now notice we did not make money here, but let's see where we placed our stop loss. So when we entered, we could have placed our stop loss here. It's a little far, don't you think? So we can do a little bit of improv. We can actually bring the stop loss here. A swing low is basically a down move, which is a red bar followed by a white bar. So we can get a little aggressive on our stop losses. That is where we keep our initial stop loss, and we have another stop loss over here. This is a long sideways, so we can keep the stop loss right at the bottom, and if the market reaches, we will exit. That's exactly what happened. Same thing over here. When the entry happens, we raise the stop loss. The initial stop loss is over here, and then we raise the stop loss to this bar and we exit. So this is a slightly lost trade. The entry in August is even simpler. The initial stop loss placed would be here, and we keep raising our stop loss to the latest swing lows until we get stopped out, which is here. Now notice October is a beautiful month. Out of all of this toil and many of these trades, October turned out to be the best. But you see, there's no way of us knowing it. It doesn't even matter. All we need to do is follow the system every single day. So in October, we have a swing high. It breaks on the 14th of October. We enter at around a price of 392.5. Great. Our initial stop loss is the swing low, the latest swing low, and the point is here. We go up a little bit and we keep raising our stop loss to the latest swing lows. Now I understand there's a big move here, so we can also raise it to that little red bar, and then we move all the way up and we keep raising our stop loss. This requires a hell of a lot of patience because you are seeing a large profit and you don't know if the market will crash or not. You keep raising the stop loss until you exit, and that raise is here. You exit at 480. That's a beautiful, beautiful trade. Now this is what trailing a stop loss and exiting looks like. You can have a fixed exit as well, but we won't be discussing that. You need to remember to cut your losses as soon as possible and ride your winners like we did in October from 390 all the way to 480. Position sizing. So now that we know how to buy and how to exit, the question arises, how many shares do you actually buy when you trade Axis Bank, for example? To the layman, it may seem pretty straightforward. If you have 1 lakh rupees, then simply invest that amount when the swing high breaks. But things are rarely so simple, are they? You see, you cannot risk more than 1% or 1.5% per trade of your entire capital. I'll tell you what that means. If you have 1 lakh in your account, you should not risk more than 1,000 rupees or a maximum of 1,500 per trade. This way, you can handle fear and you can make sure that you preserve your capital. One of the biggest problems with traders is that they lose a large amount in a single trade. Notice this has nothing to do with how much you invest. It's irrelevant. What matters most is how much you stand to lose in a trade, how much you risk. And once you know the maximum amount you can lose in a trade, you can figure out how much you can make in a trade. Calculating this is easy. Let's assume your capital is rupees 5 lakhs. What's 1% of 5 lakhs? That's rupees 5,000, of course. So that's the maximum amount we can risk on any trade. So let's see another example so it's crystal clear of State Bank of India. Now this is October. Now you'll notice in October we had an entry. We discussed this before. This is our entry point and that is our stop loss. Now what's interesting is that this is about 13 points. 13 points of risk. So 5,000 divided by 13 is 384 shares. We kept trailing our stop loss from here to here and finally this point. Now I know this is very small, but if you look carefully, that is a swing low which got broken on this day. That's the 13th of November, and that is our exit point. This move is our profit. So we got profitably stopped out with a 23 point profit. Now let's say we remove 1.5 points for brokerage, taxes and slippage, then this is a profit of rupees 8,200. Now before I let you go on to the practice sessions in the course materials and quiz, here's some additional information you need to know. Number 1, when you buy a swing high, make sure you place the buy order slightly above the swing high. That's called the filter. So say the Axis Bank swing high is at 600, don't buy 600, buy say 601.2. The course material has an exact list of stocks and filters you can use for them. Number 2, when you calculate risk, that's entry minus stop loss, make sure you add brokerage and add filter costs to it. This is vital because these are costs to your capital as well. Number 3, stocks you can begin to trade with are Axis Bank, State Bank of India and Nifty. They trend extremely well and are very fluid on the daily charts. This works on other stocks as well, but these are 3 stocks to get you started with. So there you have it. You just created your first trading system using technical analysis. Congratulations. Give yourself a little pat on the back. In these 5 lessons, we learned how to build a basic system from scratch, and you've learned the basics of how to follow one. You have learned the fundamentals of this mode of trading, and in future courses you will learn more advanced concepts and how to apply them in all kinds of markets and all kinds of time frames. This will enhance your trading and generate a higher return on your investment. Remember, ride your winners, cut your losses. I'll see you very soon in another course on Trade Academy, and of course don't forget to check out the course materials. See you soon.